China's currency is near a 5-month high, and gold is now at an 8-month high in US dollar terms. But first, let's touch on the 65 trillion in hidden debt in the form of currency swaps, which have grown nearly twofold since 2008. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, stay till the end of the video so that you don't have to watch any other videos on YouTube, because here on my channel we will cover everything, hopefully everything. You guys let me know if I missed something in the comments. All I ask you to do, get this video to 1,000 likes. Let's get into it. So there's 65 trillion in ballooning hidden dollar debt across the global financial system, which has doubled since 2008. And how it works is one party borrows a currency while lending another. These must be exchanged back at a future date in a swap contract. These contracts are a form of debt, and often this debt is not recorded on balance sheets due to bank accounting rules. Well, corporations use currency swaps to hedge risk, often when assets are sensitive to interest rates. Sudden rate fluctuations could mean much higher costs for these trades, and sharp swings in USD could spur liquidity crunch. Now, we've been talking about the liquidity crunch that is currently happening, and that could really drastically affect the economy and these bigger players which have a ton of debt and overnight loans and hidden dollar debt. But remember, sharp swings in USD could spur a liquidity crunch. With that being said, you are seeing that sharp spur in the US dollar start now, right? Other currencies are starting to beat the US dollar, but not only that, we talked about when the US dollar leaves this parallel channel, and in which sense it is a falling currency. You can see it right here just based off of the chart. It has a lot of volatility when it tops out and pushes to the downside, which is exactly what you're seeing right now. You saw it back here, right here, and finally we're seeing it again, and these sharp falls happen usually pretty fast and could spur liquidity crunches across the board. With that being said, the Swiss National Bank just posted an annual loss of 142.67 billion in 2022. Now imagine being upset about your Webull or your Robinhood or your Fidelity. Just think about losing 142 billion in 1 year. Also, US equities could slump another 22% from current levels, according to Morgan Stanley. And Goldman Sachs Inc. plans to cut 3,200 jobs starting this week. With that being said, we have earnings season coming up, and what shows strong earnings, right? It is definitely not cutting jobs. You see these bigger players cutting jobs across the board, and this doesn't indicate a positive earnings season going forward. So in my opinion, the market green right now is just a bear market rally. It's a mid-bear market rally. Even the Fed gave a message yesterday that, you know, these temporary rallies are just going to prolong the pain. Essentially, everybody knows going forward, the stock market has to find a bottom, in my opinion. It's almost a 90%, you know, you can't guarantee anything in the market, but I'm almost 90% certain that the SPY will continue to fall. This is a temporary rally, in my opinion, and if we're going to touch on the charts real quick, this is something I'm definitely seeing play out. Us come up to this 395 level before essentially trading a little bit sideways and getting slaughtered back to the downside. Of course, watching this box down here at the recent lows around 353. Essentially, I still think the SPY is going to fall further. You guys let me know in the comments what you think. Binance is also bleeding assets, 12 billion gone in less than 60 days. And if you guys don't see crypto like Bitcoin and Ethereum starting to actually rally, and I mean actually rally, then chances are bigger players aren't ready to pump money back into the equities. Also, US government officially seizes SBF's $455 million Robinhood shares. What they're going to do with them, that's out of question, I don't know. But before we get into the AMC numbers, a quick thank you from our sponsor today, Moomoo. If you use my link and download Moomoo and find a penny somewhere in your room and deposit that into Moomoo, you will get up to 15 free stocks and a chance to win $60,000. The more you deposit, the better the benefits. However, either way, it is a zero commission trading platform that keeps your money FDIC insured and has a ton of other benefits. So use my link, guys. Download it on your phone or computer. It takes 2 minutes. Sign up, make a deposit. Let's get back to the video. So according to Ortex, AMC has a short interest currently of 21.53%. Cost to borrow average 220% and a max 250. They are not showing a minimum. 7.24% short interest on APE with an average cost to borrow of around 8%. According to Sanko Tracker, there was 85,000 shares available to borrow at a recent fee of 92%. You can see this still slightly dropping. We are losing 7,000 calls in the money compared to 23,000 puts on the options chain. And as for GameStop, 5,000 shares available to borrow at a recent fee of 20%. Options chain kind of leveled out right now. from calls to puts. Now, to close out the video with a little bit of speculation, this was posted by JP versus Wall Street, filed around January 25th/28th. I believe that Melvin bailout essentially involved Citadel purchasing all of Melvin's short positions, covering them with naked shorts, and then utilizing out-of-the-money options to conceal the FTDs. Post this picture right here, company name, Citadel KW Melvin Holdings 2 LLC, Delaware Domestic Limited Liability Company. He then goes on, they carry out all of this through a specific shell business in order to avoid having to list liabilities under Citadel securities. They may have even used the option purchases made in the shell company to legally permit Citadel securities to naked short the stock to maintain neutral hedging as required by a market maker in order to achieve the same results without ever having to involve Citadel securities in any of the Melvin Capital rubbish. They wouldn't want Melvin Capital on their balance sheet. Now, this is interesting, and of course it is speculation. It's interesting, and that is why I brought it up, because Citadel is further paring back $2 billion Melvin Capital investment. This was in 2021, and then they redeemed $500 million of their Melvin Capital investment, and it's just all kind of fishy to say the least, because we remember Melvin closed, and they never really came out and said, you know, we closed our short position. Not only that, but you didn't see an effect in the price. So what happened to their shorts? Short interest stayed the same, the price didn't increase, and Melvin Capital shut down. Well, prior to that, Citadel bailed them out from the GameStop rally with billions of dollars, right? Let's just say Citadel lends them billions, they take half, and they go, listen, man, you're going bankrupt either way. Here's the deal. If you want to forcefully cover those shorts, you're going to screw all these other institutions over because it's going to cause domino effect and it's going to force us to sell. So here's the deal. You're going to go bankrupt anyway. So we're going to give you this investment. Half of it you can close down and walk away with clean. We will hold your short positions for you, but you do have to close down your fund. You can take this half, close down your fund. We'll hold the other short positions for you, and we're going to redeem half. It is what it is, and if this was the case, it's just crazy to say the least, but it is definitely something to think about. You guys let me know in the comments what you think about this. Also, I wanted to bring this up. During the short sale, your shares are the ones currently being designated as lent out by the brokerage firm, but the broker essentially owes you shares. When you want to sell the shares, the broker is required to place your shares so you may sell them on the market. This is interesting. We all knew this, but if you think about it, right? If you think about it, everybody who holds on Webull, Robinhood, Fidelity, wherever it is that you hold, essentially if shareholders sold, whether that allows shorts to cover or not, they really have to replace shares, right? The broker, all of the shares are IOUs unless they're on computer share. So this is just interesting because if everyone sold, would Webull be able to deliver? For example, I tweeted at them, would they be able to deliver these shares? Moving on, AMC is trading at $3.98, and I honestly expect a little bit of a rally this week, and we're going to touch on why. I expect a rally all the way up to this nearest resistance at around $5.15, and this is why. Ethereum Classic tracks AMC's chart, AMC tracks Ethereum Classic's chart, and when one gets a run, the other one usually gets a run almost 100% of the time. Currently, Ethereum Classic is up over 32% over the past few days, and AMC hasn't started its rally yet. It's currently up 3% on the day, and I do think, you know, the correlation over the Ethereum Classic and the Dogecoin, AMC should have a slight rally. But not only that, the market is rallying in general. AMC, GameStop, they should be green alongside with the market, plus these coins in general. However, don't be fooled, because in my opinion, what's happening now is a little bit of a pump, a bear trap pump for retail to buy in, so the market can just drop off harder and these bigger players to make extra money off you. Overall, guys, hopefully you enjoyed the video or found value out of the video. You guys let me know in the comments down below. I tried to make this video not as long as yesterday's, so hopefully it isn't as long. That is it, guys. Subscribe to the channel, have post notifications on. We are about to be at 9K subs. I love you all. Lottery Stocks out.